US investors can't make up their minds. Over the course of this week, we've seen sentiment flip a number of times over the course of the trading week as investors have grappled with the impacts of the escalation of conflict in the Middle East. They've flipped between optimism that this will be a very short conflict and will lead to resolution of a number of the issues that are plaguing the world and the geopolitical outlook for the Middle East. On the other hand, there are concerns that this will be a much more drawn-out affair than anyone anticipates, and that the impact, particularly on oil prices, will send an inflationary impulse around the world and potentially also slow economies as energy markets choke up. That indecision has been reflected in the daily performance of the major indices in the US, and last night it turned negative. The Dow was down 1.6%. Interestingly enough, more than the S&P 500, which was only down about 0.6%, but the Russell 2000, that very broad measure of US shares, was down, indicating that the swing in sentiment was quite severe and widespread. And no doubt that's one of the reasons why Australian futures closed the overnight session down more than 1%, and looking like they're going to definitely reverse more than the almost 0.5% gain that we saw in local trading yesterday. Stocks that were hit last night include Southwest Air. It was down 7%. UPS down 5.8%. Interestingly enough, Booking.com was up 8.5%, suggesting some optimism, but may possibly reflect the fact that Booking.com share price has been under pressure for a long time. In another side of rising anxiety, the VIX, the Fear and Greed Index, rose. It's back towards 24%. And European markets were hit again. The DAX, the Italian index, also down, both more than 1.5% lower in overnight trading. And in the US, silver and copper stocks were hit. And speaking to that idea that the choking up of energy markets could slow global economies and therefore demand for industrial metals like copper and to a lesser extent silver. But regardless, those stocks as a group were down 6% in trading overnight, showing that no sector is untouched by this latest flip-flopping in sentiment. In terms of earnings in both the US and in Australia, we're just about done, and look for our wrap of the earnings season early next week. We'll also be taking a preview of Hong Kong, because earnings reporting will kick off there next week and could be very important for a number of key companies. But overall, last night, confidence has cracked, and there are some concerns. And of course, when confidence cracks, we turn to the more bearish commentators, and we're hearing calls that the S&P 500 could be down 12% over the coming weeks. And it's all based around the oil price. Now, remembering that Brent is the key European contract, and it's the most expensive at the moment because of the potential for supply to be affected in the Middle East. It's trading around $85, with a lot of analysts calling for a move up above $100 a barrel. That sort of move could really push inflationary impulses around. One of the US investment banks has estimated the overall hit on earnings will be more than 1% across the US share market. But of course, any hits to earnings from higher oil prices will be very unevenly spread. And despite the fact that a number of analysts and strategists are suggesting a move into heavy industry, it's heavy industry that will actually be affected the most by rising oil prices. So some caution on that trade for hard assets at the moment. The Fed's certainly going to be more hawkish in response to these current moves. And the potential for the next interest rate move in the US to be up rather than down is increasing every day with that increasing oil price. So, of course, that would require readjustment. A number of analysts calling for a move in the S&P 500 back down to 6,000, i.e. more than 10%. So it's interesting. In the US, there's been a lot of indecision about the impacts of the Middle East, but investors in other parts of the world have been a lot clearer about what they think might happen here. The Australian share market is down 2.8% so far this week. Hong Kong down almost 5%. The FTSE down more than 4.5%. So it's pretty clear, other than in the US, the conflagration in the Middle East is seen as a clear negative for shares. And it might mean that the US sentiment is just catching up with the rest of the world, and we could see further negativity emerging from the US. It's not all losers, of course. In Australia and in the US, the big gainers over the last 5 days were oil and gas stocks, up 7 to 9%. Interestingly, software stocks have bounced back. Now, in the lead up to this escalation in the Middle East, software stocks have been under extreme pressure as investors seem to decide that AI was going to cut their lunch. But instead, we're now seeing software stocks reverse that negativity. And even in some cases, it appears investors believe AI will be an advantage to them. And that flip in thinking means that software stocks this week are up 4%, despite the ructions in other markets. Turning to our watch list today, naturally, there's a focus on energy, and locally listed Viva Energy is a fuel supplier in Australia. It was up 12% yesterday in a single day. It leapt and then moved higher. And oil refiners are leading gains around the world. They're seen as the key beneficiaries of the increase in oil prices. Shares of Viva Energy are up 27% year to date, but it still has a buy rating. And one of the global investment banks came out this morning and reiterated its buy rating despite that 12% jump yesterday. So clearly, some analysts expecting further gains for Viva. And of course, if that oil price continues to rise, it's likely to provide plenty of positive momentum for Viva Energy shares. More surprising, I thought, was that Expedia, the travel group, online travel group, was up almost 14% overnight. These are extraordinary moves in very valuable stocks. The AI disruption fears we mentioned a moment ago are fading for Expedia. It's seeing growth in both B2B and B2C channels. And it's arguing that AI will make it more efficient, lower its cost of production, and improve its travel tech platform. So shares are up 35% over the last 12 months. Once again, a number of analysts have buy ratings on Expedia, and it's just recently reported its fourth quarter revenue was up 11%. So some pretty clear earnings momentum. If it's unaffected by the Middle East situation, we could see further gains for Expedia shares given that momentum in earnings. And third on our watch list today is Marvell Tech. Now, Marvell Tech provides the hardware largely for data centers, but also for other digital applications. It announced its result this morning. Earnings per share was 80 cents. Revenue was 2.2 billion. And in aftermarket trading, Marvell shares are up 14%. So another huge mover. All of the stocks on our watch list today have made very big moves recently. For Marvell, data centers are the key. Fourth quarter revenue was up 22% in the data center sector. And it does expect the full year of 2028 to grow another 50%. Its first quarter guidance is for revenue of $2.4 billion. In other words, about a 9% increase. The stock is actually down 30% year to date, despite those big gains. And with a target of $118, it looks quite attractive, trading around that $75 mark.